Okay. Did it work? Duncan, tell us if it worked, or don't tell us if it didn't work. And
It looks like we're live.
all right, we're live. All right, forget it. We'll go. So unless I'm informed otherwise, we are literally live from the compound, live in real life, like speaking right now. We have an eye on the stream too, which is kind of cool.
Now.
Yeah. So we're gonna play our favorite game. What are your thoughts? Michael Batnick is here as always. I'm your host, Downtown Josh Brown, or your co-host, and Mike and I are gonna get into what we think are the most important topics on the street in finance going on right now. And we love your feedback, so jump in there, tell us what you think as we're going, and we'll see if this experiment in doing What Are Your Thoughts Live works out. Duncan, hit the music. That was hot. All right, we're going to talk about the TLT. I feel like it's maybe the biggest topic right now. Hard to ignore. Had a 20% drawdown in the TLT ETF since August. And for those who aren't aware, the TLT is long-dated treasury bonds in an index ETF. So just about 20% below the peak. Mike, are people freaking out? And if so, should they be? Is it rational?
Well, before we get to that, people are expecting more downside. So Danny Kirsch just tweeted at the market close. So we've got Jerome Powell, FOMC minutes tomorrow. I guess not minutes. He's going to be speaking. So look at this. Look at this put volume on TLT, meaning people are anticipating lower bond prices, higher rates. You got the 5-day average at 84,000. Let's go a little bit further out. 82,000 contracts is the average for 20 days. 240,000 today. So 3x increase. So people are expecting rates to rise further tomorrow, whether or not he even says anything. So are they being rational?
Well, wait a minute. Why are they buying puts on the ETF when they could be trading treasury bond futures in the more professional futures trading market?
I'm not a market.
Is this retail money buying puts on an ETF that's already in free fall, or are these pros?
I don't think so. I'm not a market structure expert, but I don't think these are Robinhood users buying puts on TLT. That's pretty boring.
I don't know.
I think it's a little bit too sophisticated / too boring.
Right.
So what's going on? So are people aren't expecting Powell to say anything. He's not going to say anything. They're not changing. But I think people are afraid of rising inflation. So it's not that they're just afraid of rising rates and that's why they're dumping bonds. They're afraid of inflation eating into the already low nominal yields. What's the yields going out 20 years? Seriously, is it 2.2, 2.3? It's not very much.
It's not high. But all right, so let's quote James McIntosh. He wrote at the Wall Street Journal, for investors in the longest dated treasuries, which are the bonds that are in this ETF, the past 3 months have been as bad as the taper tantrum plunge in government bonds in 2013. He's basically saying buyers have concluded that locking up their money for a decade or more in treasuries is now riskier than before because there's a much greater chance of high inflation eroding the value of fixed income. So in other words, it's not that they know inflation is coming. They just think the risk has risen. And so they're demanding more of a premium to be in bonds with a 20-year maturity.
Well, market expectations for inflation are at a 5-year high, 10-year high, highest it's been in a long time.
Okay, so if you lost 15.6% in a 30-year treasury over 3 months, McIntosh is making the point that that's the equivalent of losing a decade of the income that 30-year treasury was paying as recently as 3 months ago. So that's a lot of damage. You have your finger up. I assume you're either trying to gauge which direction the wind is blowing, or you want in on this.
There is a but. There are two components to bonds. There is income and there is price return. And if this is a head fake, I'm not saying it is, but if rates come back down, then it's not going to take 10 years or whatever it is to make your money back. It's going to happen in a hurry.
That's fair. And a lot of what we're talking about is term premium anyway. And I think maybe what we're seeing is just a big shift amongst very big money. And it looks bigger than it is when you look at the price of an ETF. But maybe you have to give it like more than a few days to see that thing correct for itself. So Go ahead.
I also want to make the point that I think that there is a cap on rates, not from the Fed, but from demand. There are still, I forgot the number, 13 trillion in negative yielding debt. So this, relatively speaking, looks so juicy. I know it's ridiculous because rates are still so low, but I think that the demand for bonds, which is why we have low rates in the first place, at least it's certainly one of the reasons, I think that that is still on the table. So I think that there is a cap on how high rates can go. I could be very wrong, obviously, but I think that this is a buying opportunity, which sounds ridiculous given where rates are, but that's what I think.
If you're an insurance company that needs as close to risk-free returns as possible, and you see 1.6% on a 10-year, and you don't believe the Fed's going to hit its 2% inflation target consistently over the next 10 years, you look at that yield and you say, yeah, we're buyers right here, right now.
With leverage, give me all that.
And all the leverage. But there's a lot of money that's looking for anything above 1.5%, which I agree with you. I think it's a natural stabilizer. But we'll see what happens. Where do you want to go next?
All right, I want to talk about Vanguard put out this piece on asset bubbles and where to find them. And this is a crazy quote from William Getzman at Yale University. There's a paper that he wrote called Bubble Investing: Learning from History. And I'm going to put this on my blog later tonight. I'll do some more digging on this. He said, assets whose prices more than double over 1 to 3 years are twice as likely to double again in the same time frame as they are to lose more than half their value.
That's insane.
Holy smokes.
That's momentum in a nutshell. Right? Like, that's what we're talking about. An object in motion tends to stay in motion.
If you needed to know like one thing about bubbles, I would say like that's pretty much all you need to know. Meaning the takeaway is, listen, we can scream about bubbles, and I've probably been a little bit too guilty of this, but you are not, barring you being struck by lightning and getting that type of luck, you are not going to make money off of calling a bubble. You're just not.
Well, right, because even if you call it, that bubble is twice as likely to become an even bigger bubble than it is to get cut in half at any given time, until, of course, the end. Like at the end is when that stops working, but who knows when that is. That's interesting. What did he look at? He looked at the U.S. stock market versus low quality growth.
That was different.
That's something else.
So he looked at all stock markets going back to, I think, the early 20th century. Here's another quote: "The chances that a market gave back its gains following a doubling in value are," what would you guess?
For stocks, 30%.
Again, I think this might be countries. 30%. That seems reasonable. 10%.
I just always say 30% for everything.
Can't be wrong.
90% of the time, a stock market that doubled didn't give back its gains in how long?
It just says the chances that a market gave back its gains following a doubling value are 10%. I don't know the exact details, but basically things go on a lot longer, as we've learned the past decade, a lot longer than you think. And I want to talk about something that I think is, again, I want to be respectful of the market and not think I'm smarter than the market and not call everything a bubble. So let's just say that this is ambitious, right? I don't want to use the B word. Let's just say that this is ambitious. There was an article in the Wall Street Journal. Duncan, throw up this chart for projected revenue from electric vehicle companies. Okay, so they said in the article that Google was the quickest U.S. startup ever to go from $0 to $10 billion in revenue. It took 8 years. And as you can see on this chart, there's 5 EV companies: Arrival, Faraday, Fisker, RE Automotive, Archer. They all are expecting to go to $10 billion in 5 years. So what's going on here? There's a quote from Robert Jackson, a former commissioner with the U.S. Securities and Exchange Commission. He said, the real problem here is it's a regulatory arbitrage. It's a loophole. Why? Because these things are inside of SPACs, and SPACs, unlike traditional IPOs, can give forward guidance. And Gavin Baker had a great quote on this. He said, it is unlikely that companies are going to be able to ramp at a rate 2 to 3 times faster than Tesla did. He said, quote, it is easy to make PowerPoint slides. It's relatively easy to make a few prototypes that look good and drive well. But it's hard to do mass-produced, high-quality, reliable cars.
Yeah. All right. So there's a couple of things going on here. The first is anybody can make a slide deck and just show charts that hockey stick, and You can use other people's data to make that case. So if you're an electric vehicle company, you don't even have to come up with your own data to support that. You could find 500 different studies about the adoption rate of EVs, find the one that looks the best, make a really sick chart, throw it in the deck, list who the source is. The investor class isn't fucking going any deeper. That's literally what they're looking at. Like, they look at this chart, look at that chart. They're almost investing on pictures, like hieroglyphics.
But come back to the bubble stuff. If you think, and again, is this a bubble? I don't know. It seems pretty ridiculous to me. I don't know if it's a bubble, but it certainly seems absurd. How do you profit off this? What are you going to short these companies?
All right. So I'm going to tell you that the rent-a-helicopter company is not getting to $10 billion in revenue in the next 10 years. Sorry. It just isn't. Can Faraday Future and Fisker, who are not even making their own cars, they're actually outsourcing the manufacturing to somebody else. So I guess they're a branding company that's got some patents on some of their designs, but they maybe have a shot if they can find people that are willing to make that many cars for them and people who are willing to buy them.
And
but
if they could pivot, if they pivot to non-fungible tokens, they have a better chance.
Dude, now the only argument that may be reasonable would be to say Google did its first 10 years from 04 to 14. And $10 billion back then was a lot more than it is today. Mm-hmm. And they're selling ads for $5 a pop. These companies are selling $50,000 automobiles. That's the only reasonable basis.
$10 billion.
I'm not saying I think they will. I'm just saying if you had to come up with a response, if you worked in PR for one of these companies, you could say, well, we're not selling $5 ads like Google. We're selling $50,000 cars, so our path to $10 billion in revenue, if anything, makes more sense.
How about this? Will the 5 of these companies combined do $10 billion in revenue in 10 years?
What is Arrival? Is that like an alien abduction startup? What is it? I don't even know what that is.
Yeah, with Charlie Sheen. I saw that movie.
Sucked. All right, let's go next. Needless to say, these are claims that probably will not be backed up. Oh, I wanted to say one other thing on this, though. Tesla was notorious in its first 10 years for over-promising and never delivering, and it didn't matter. Because every time they missed a milestone, they just announced an even bigger one further out in the future, and that shit worked.
I'm using Tesla in my blog post for later. That's a perfect example of how we thought Tesla was a bubble a year ago, and it doubled.
Well, they would just push out the goalposts, and the investors were like, all right, they missed this milestone, but did you hear about the new one? And it worked. So
all right, what's next?
Who's to say it couldn't work again for some of these guys? I wanted to what did I want to do? Oh, $1,400 checks. Should we just send the money directly to Coinbase? Like, why even bother sending it to people's bank accounts and households? Let's just send it where it's going to end up. That's the way I feel like Bitcoin has been trading over the last 10 days, that people genuinely think that's ultimately where this money's going to flow to. SPACs, NBA Top Shot, and digital currencies. Am I being too cynical about this whole thing?
Cynical how?
I don't know. Skeptical, cynical. How many people are going to use stimulus checks to buy cryptocurrency?
A bunch. A lot of people.
But, so, like, is it stimulus? What are we even doing here anymore?
Well, what's the question? You're all over the place.
I don't know. The irony of the Fed literally
buying Bitcoin?
Buying Bitcoin
indirectly?
with a little bit of help in the middle from college kids. Like, what are we doing? Literally,
so here,
I don't know.
This is pretty great from Deutsche Bank. Is this from Deutsche Bank? An online survey of 430 investors. The headline was young people are looking to spend almost half of their stimulus checks on stocks.
So what the fuck is that about? How is that a stimulus? Who is it stimulating besides Snoop Dogg's investment in Robinhood?
Listen, I'm not the one sending the checks. Why are you interrogating me?
I'm lost in this.
Okay,
in
fine.
This world.
Well,
I'm increasingly lost.
But it's not just young people that need the money, right? Like there's people that are older that genuinely need the money, and so if young people want to buy some GameStop, all right.
I wrote this screed this morning. You probably hated it, but like maybe buy a suit and fix your car and pay your credit card debt down and like get your shit together for the reopen instead of speculating on digital baseball cards.
Terrible.
I'm the asshole. I'm wrong.
Yep.
Bad take. All right.
I didn't read your post yet. I wish I did.
Yeah, you're probably better off that you didn't. You would ask me not to bring it up tonight. All right. What do you got? What do you got next?
Oh, look, it's right there on the screen. I want to talk about how to become a financial advisor. I get these questions all the time.
Yeah, this is good.
And usually I usually have a really bad answer. My answer is usually, listen, RIAs do not have training programs. They don't have like these fortress balance sheets like Merrill Lynch used to. We're not just hiring a crop of young people and hoping that one successful person pays for the 99 people that wash out. And that's a pretty bad answer. I'm not happy with that advice.
It's a cop out.
Yeah, it's not good. So I wrote about how to become a financial advisor. You know how I did it? I met you.
Yeah.
Remember that?
So that is that the end? Is that what you wrote in your blog post? My phone number.
So, all right. So what? Go ahead.
Wait. So how do you tell people to become a financial advisor? Let's not tease anybody.
Okay. So here's what you do. You can, one, be creative. I just spoke to an advisor literally last week who told me that he found a local RIA, saw what they were doing on their marketing efforts. I think he might have had a marketing background that said, here's what I can do for you. Here's the value that I could add. And it was a back door. So he thought outside the box. He was creative. That's one way. I'm not suggesting that you have to be a marketing person, but just
scale for that advice doesn't scale for everybody paying attention to this. What's another way?
Well, no, hold on. I'm going. Right. Cutting me off. Number 2. Fidelity is hiring always, right? You could, not now, but when the economy reopens, you could literally walk into a Fidelity branch. They have planners. You could walk into a Schwab branch. Same thing. E-Trade, is that still a thing? Did Morgan Stanley rebrand them, or are they still a thing?
I don't know. I don't think they're training financial advisors at E-Trade, though.
So you could do that. You
Vanguard, Fidelity, Schwab. So that was your 3 primary options.
That was the third thing. Vanguard. You don't probably think about Vanguard as financial advisors, but I think they employ more CFPs than any firm in the entire country. So that is a great place to get some.
The entire state of Pennsylvania.
Right. That's the stat. So that's a great place to gain experience. You're not going to have any clients to take out of Vanguard, but it makes you more marketable. So, or one more thing. One more thing is you can go to a place like Raymond James, but it's very difficult to start your business from scratch. So unless you're like a superstar salesman, I probably wouldn't do that. And plug, you and I and Ben are doing a clubhouse tomorrow because I got another listener question. This is like the most common question. Got a listener question on, I want to be in the wealth management industry, but like more like finance adjacent. I don't want to be an advisor. What else is out there? So you, me, and Ben, 5 o'clock tomorrow in Clubhouse.
I read somewhere that RIAs are managing $97 trillion. And it's some crazy number. It's not. It's definitely the fastest growing segment within wealth management is the RIA space. So this is where people want jobs. They just don't necessarily want to be client facing. They want to be like they want to be in the industry, but not necessarily as a financial advisor. So we'll try to answer that in the Future Proof Advisor Club, which anybody can follow, and we're going to have a lot of special guests in there, and that'll be tomorrow. One thing I would just say about becoming an FA is and doing it via the training program at Schwab, Fidelity, Vanguard. They're the best. That's the best training you will ever get in terms of like how to answer questions helpfully, because you're going to be set up in a call center and you're just going to have thousands of people calling all the time, and you're going to have to learn as you go, but it's amazing. Like there's no other way to speak to that many investors. The thing is, though, when you walk out of there, you're basically starting from scratch. You're definitely not leaving with clients. So
one more thing that I didn't detail is that like 95% of these questions that we're getting are from people that are looking at it as a second career. They're looking to make a career switch. And that's why I say, I don't know, if you've got like kids and stuff, like it might be difficult in terms of taking a pay cut, and like that's what I was really getting at. But I think I have a better answer now.
Yeah, it's not easy to transition into the industry, and mentorship is really, really hard to find still, and hopefully that changes. But it's hard to find a firm that wants to take you. So call me.
Call Josh.
I'm standing by morning, noon, or night. All right. What I want to do next? What was I going to ask?
By the way,
about?
Look right on the screen. It said your topic is next.
Right.
There it is.
Okay.
See that?
Got it. Coinbase IPO. I'm a Coinbase user, by the way. I think you are too, right?
Yeah.
Yes? Okay. Which matters more for the timing of this IPO and for the underwriters, do you think? The condition over the overall stock market or the price of Bitcoin? Like if you were pulling the trigger on that IPO, what would you be more worried about in that moment?
This is a fantastic question, but I think it's an easy answer. I think it's crypto, and it's not even close.
So let's say the Nasdaq's in free fall like it was last week. As long as Bitcoin is holding up, you think the IPO will be fine?
100%.
Okay, they think this thing could be $75 to $100 billion.
Why not?
As a public company? I don't know. The last thing I read, I shared with you from Bern Hobart. Did this really great write up at the Diff, his Substack letter, and he's calling it the church. Bitcoin's the religion. Coinbase is the church or the temple.
They've got 11% of all crypto assets. So Duncan, throw this chart up. Assets on platform. So they've got $90 billion out of. I guess this is stale, but yeah. So they've got quite a lot. I wanted to share. Man, that's a wild chart.
So hold on. The blue bar is 90 billion in assets on Coinbase, and the black bar is just the whole thing. Bitcoin, Ether, everything else.
Their entire business is levered not to the stock market but to the crypto market. So I don't think that this is close. Here's something. Kate Clark tweeted a few weeks ago. Andreessen Horowitz has 16.6 billion in AUM according to its website. Its Coinbase stake at the expected $100 billion valuation is worth an estimated $15 billion.
Oh yeah.
So 15 of their $16 billion is in Coinbase.
You know what Coinbase did really well, and why I might be interested in owning it as a company? They threaded this needle between like keeping the Bitcoin people happy, which is not easy to do, like providing a service that was useful to like the real ideologues and like the real crypto people, but at the same time interfacing with like banking regulators and institutions and like stock market regulators. Like they're speaking to every constituency you need
Princeton,
to.
all the endowments use Coinbase to buy. And
do they
Tesla,
custody there, or do they just use it as a brokerage?
I believe so. And Tesla and MicroStrategy also built their Bitcoin positions using Coinbase. So you're right, but there is an irony that Coinbase and crypto is leveling the playing field. It's cutting out the middleman. It's taking it to Wall Street. There somebody tweet John Bovey at Real John Bovey tweeted Coinbase reporting 193 billion in total revenue, in total transaction volume, and 1 billion gross transaction revenues for 2020, implying a fee capture over $5,000 per million.
Yeah.
For reference,
that'll shrink
big time. For reference, because right now I think they're taking around 2%. For reference, this is more than 1,000 times greater than the fee capture for listed derivatives. And I understand these are not the same markets. So maybe it's not a fair comparison, but I think if Coinbase has one big risk, it's their fees are way, 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 way too high.
So Byrne addressed that. He basically said this is how it always starts off with relatively new trading. And what ends up happening is that fee compresses, that average fee, because the market explodes in size. And you more than make up for getting lesser capture on each trade because you have so many more people trading. So that would be the bet with this.
I will definitely not be a buyer at the IPO, but I could see it.
Okay. Where you going next?
Where am I going? I'm going to, oh my God.
This is the dumbest fucking thing I've ever seen in my life, by the way.
Ooh. Did you read this?
I hate Reddit.
Oh, I was so angry.
I almost think you put this in to trigger me. All right, go.
All right, here we go.
Set this up.
Here we go. So Taylor Lawrence from the New York Times did this article. For creators, everything is for sale. Please I hope you're not driving right now. You're gonna veer off the road. All right, these are some actual quotes. All right, you guys heard of NewNew? Me either. It's a startup in Los Angeles that describes its product as creating a human stock market. So on the app, fans can pay to vote in polls to control some of a creators' day-to-day decisions. For example, if you're confused, hold on, I'll clear it up. For example, this is from the article. A creator can use NewNew to post a poll asking which sweater they should wear. Guys, do you like my gray? Is this okay? Which sweater they should wear today, or who they should hang out with, and where they should go. Fans purchase voting power on NewNew's platform. By the way, this company's worth what? $10 billion probably.
Yeah, probably.
On NewNew's platform to participate in the polls, and with enough voting power, they get to watch their favorite influencer live out their wishes like a real-life choose-your-own-adventure game.
This is Black Mirror. So Jake Paul, let's say, is like, should I wear this sweater today, the red one, or should I wear the black one? And people are willing to spend money on that shit. Ooh, we got Jake Paul to wear a red sweater. Like, is this what we're doing now?
How about this?
Maybe more stimulus would be great.
You ever hear of Joshua Wanders? He's 30. He's a creator on YouTube. He's got 9 million subscribers.
Oh. Is
You know
he
what
doing
he's
content
doing?
about the Coinbase IPO like us?
No, it's better. He says there's a potential to earn a huge amount. There's a potential to earn a huge amount of money. It's pretty much 100% profit driven by mania. Okay, we agree so far. We're on the same page. This week, Mr. Wanders and 4 other creators will release photos of their feet as NFTs. The creators will upload their feet photos onto an auction site and live stream the bidding. The live stream will also be monetized. What is happening?
I bid
Stop it!
$6 million. But I want to get my bid in before the Stimmy checks go out.
I can't take it.
I'm not gonna. I have no more to say on that topic. But
Neither.
we're gonna do some viewer topics, and this is rapidly becoming one of my favorite parts of the show. We get such great questions from you guys, topic suggestions. So we're gonna bring in Duncan. I think that's how. Yeah, is that
There
how we're
he
doing
is.
it? All right,
Yeah, I think so.
let's go to the first viewer topic.
Flying into the camera. What's up, Duncan?
Hey, oh wait, hold on. Let me.
You're
move
live,
that.
no big deal.
Yeah,
Take
yeah,
your
just
take your
live.
time.
Let me move that out of the way.
He's
Yeah,
nervous.
Okay, sorry. Okay, so first up we have Sean from Florida who writes, "I'm a huge fan of the show. My question is the following: I put $250,000 into a Robinhood account last year during the lows and turned it into 1.2 million trading options.
I see you
Go,
following my
Sean.
blog.
Yeah.
Well
good,
done.
Yeah, good on him. This year has been rough, and the same strategy is not working. Should I take the remainder of my winnings and put it in the QQQ, or continue selling vertical spreads on Tesla and Amazon? There are probably other options, but those are the 2 options that he's asking about.
A or B?
Mike, you want to define vertical spread, and he's selling them. So is he
Dude,
selling
vertical
a vertical
spreads.
put spread?
I took CFA level 3 like I don't know, a long time ago. Vertical call spreads.
So
That's not my
yeah,
bag.
but he's saying he's selling them, which implies he's selling a put spread. This
Hold
is
on,
so
what is he
far away
doing?
from. I don't know. Should I put it into triple Qs or continue selling vertical spreads on Tesla and Amazon? Vertical spread involves simultaneously buying and selling options of the same type and expiry, but the strike prices are different. You understand? So I think he's selling 50s and 70s, let's say, on a stock, and hoping it goes up, but doesn't go up too much.
Yeah, that doesn't work in every environment. I mean, obviously.
Right.
Okay, so we're saying that's not a great idea. So put it all into the queues. Okay, good. Next question.
No. I mean, is there something in between those two things? Both are directional bets. One of them, I think, limits your upside but limits your downside, and one of them just buy the market. I don't know.
I have
why.
an idea. I have an idea for Sean. Obviously, he killed it. 250 to 1.2. Gigantic
Great.
kudos.
It's amazing.
How about like you keep having a lot of fun and doing your thing, and you also maybe get like something like a target date fund, like some sort of serious allocation where you can just park that over there and continue to do whatever you're doing.
Yeah, shrink it back to 250. Go back to the original size. I mean,
House
I've never seen somebody take $250,000 and start a Robinhood account and start trading vertical spreads, but maybe go back to the 250 and bank the $1 million into something that's a little bit less nerve-wracking. I think that's a good idea, Mike. All right, let's go to the next one.
Okay, so Brett from Georgia writes, I'm 36 years old and have about 1.5 million in the stock market. I've managed
Jeez.
it myself thus far, but do you think there becomes a point where I would be stupid to not hire a professional to help manage my assets?
This is tough. My answer to this would be, how much time are you spending a day on this,
Excuse me,
and
sir.
are you enjoying it?
This is my question.
Go ahead.
Takashi.
Go ahead. Go ahead.
So when do you offload this I don't want to call it burden, this responsibility? Some people never do. I mean, obviously a lot of people never do. Here's what I would say. Get help when you need it, and you will know when you need it because it will become either too stressful, too complicated, too time consuming. You have other responsibilities, but I wouldn't say that you have to offload that. I would just say that you'll know when the right time is. Maybe it's an event. Maybe you do something foolish that you're like, oh, I need to take my hands off the wheel. So that's what I would say. Takashi?
36. At 36, I feel like you should be like starting a family and like maintaining your home and like really focused on your career. So if you have this $1.5 million in stocks and you're not like obsessing over it all day, you could probably just let it do what it's doing. But if that's not the case, and all day long you like find yourself reading filings and listening to conference calls and other counterproductive shit, like maybe that's when you know, hey, I'm spending too much of my life doing this thing, and I want somebody else to just take it off my hands.
And if you need a financial advisor locally, like somebody maybe in the South, we have somebody.
Yeah, but Brett, I guess like figure out how much of your time is going to this and if you're enjoying it or not. And if it's too much time and you're not enjoying it, that's probably all you need to know.
Can we review?
Let's review. We did a lot tonight.
What did we learn?
We did stimulus payments, Bitcoin, asset bubbles.
By the way, when is Coinbase's IPO?
Well, they like any day now. If everyone's writing up the filing, it's probably a few weeks before it becomes effective, and then they decide like, all right, today's the good day. Like they get their order booked together the night before and they go.
All right, so what else is up?
What else did we do tonight? Oh, electric vehicles. We did a lot.
What are you doing later? We're live.
Dinner. Yeah. That's pretty much it. All right. Hey guys, we had an amazing time tonight. I hope you guys enjoyed this first ever live edition of What Are Your Thoughts? Keep your comments coming. Make sure you subscribe to the channel. Tell your friends about what's going on here. I feel like that would be really great. And by all means, continue to submit viewer topics. The way to do that is to send us an email, askthecompoundshow@gmail.com. We love all your suggestions. We try to incorporate as many as we can. And we will see you next week, whether or not live to be determined. Thanks so much, guys. Duncan, shut us off. I'm hungry.